My name is Tim Kehoe. I am the Director of Strategic Partnerships here at ECDI, and I will be walking you through our information session. As you can see, this is going to be a brief overview of all the different programs and resources that we have available to you as a small business owner or a new entrepreneur. So at ECDI, our mission is investing in people to create measurable and enduring social and economic change. What this means is that we support small businesses to either start or grow, largely with the mission of creating employment opportunities primarily for low to moderate income individuals. We are what's called a CDFI. It's a Community Development Financial Institution. This is a Treasury Department designation that says in many ways we are like a bank and that we have small business lending programs, but then in many ways we're not like a bank at all, where we don't have deposit accounts, checking accounts, savings accounts, or credit cards or anything else like that. We have small business assistance and access to capital. We are a nonprofit small business support center, and we are what's called an intermediary micro lender for the Small Business Administration. This is a program from the Small Business Administration that ECDI is actually the largest micro lender by volume in the United States, which is a big deal because we are in Ohio and not one of the large population centers. But we do consider ourselves a one-stop resource for all things small business, training, coaching, and the key portion of access to capital. We were started in 2004 by Ina Kinney. She came to the United States as a child, as a refugee. And her father has one of those quintessential stories where he came to the United States as a well-respected engineer from former Soviet Union and started over. In many ways, started small businesses and continued and started multiple businesses and finally found a successful business route and became a really successful entrepreneur. So Ina sees that as a very tangible thing and something that she is a product of the entrepreneurial mindset and a small business owner, and so she knows what it can do for families for generations. And so she was also very keenly aware of the immigrant experience, and so ECDI has kind of been firmly based in lending programs and assistance programs that are designed to serve asylees, immigrants, and refugees. We have physical locations in Columbus, Cleveland, Cincinnati, and Portsmouth. And those all include women's business centers that you'll learn about here in a moment. We also have field offices in Toledo, Akron, and Canton. Our main headquarters is here in Columbus. This is where we have much of our kind of administration, along with some of our individual programs that you'll learn about in a moment. So at ECDI, we put our programs into kind of invest, educate, and innovate. And so these come in a variety of programmatic ways, many of which are housed and centered in our Business Incubation and Innovation Center, or what we call BIC. These are the wraparound services, training and incubation acceleration programs to help businesses either start and grow or to continue to grow and become sustainable, successful businesses. And then we also have our small business lending programs. So these are access to capital for small business owners who can't access programs through a traditional lender, like a traditional bank. This is our programs are designed and created to meet a need that isn't already being met by those the large lenders that you can think of. So the first thing we're going to review is our BIC programs. These are training, education, and mentoring programs. These come in 4 main programmatic buckets right now. Our women's business centers, which is our general business assistance centers open to individuals of all genders. Our food-based business incubation services, largely run at our food fort. Our Capital for Construction program, which is for minority and women-owned subcontractors in the construction industry. And then our social enterprise incubator, which is for social enterprises, be it nonprofit or for-profit businesses. So membership in BIC allows access to a number of those programs. It also allows access to one-on-one business coaching, our training and education programs, assistance with creation of business plans. So if you're at that idea stage and you want to turn that kind of idea into an action plan, they can assist you with that. We also have access to our professional advisory network. These are lawyers, accountants, marketers who have come to ECDI to help assist small businesses. And so we've built out a network to allow them to quickly access small business owners to be able to assist them. So if you can imagine, having access to an attorney, you're not going to get a customized executable document from that meeting. But if you have contracts that you would like to review or new lease that you want to review, we can set you up with an attorney as part of your membership within BIC. We also, when we are open for in-person education and trainings, we have our meeting and co-working space with shared Wi-Fi, resource library. We have computer lab, printing and notary services. Those are all somewhat temporarily paused and postponed as we work through the remaining portions of the pandemic. But we do offer weekly free virtual classes. Those are housed through our Business Incubation and Innovation Center, but they can be found at ecdi.org/calendar. Many of them are hosted similar to how we're doing it right now. As I mentioned before, we have women's business centers that are located in Columbus, Cleveland, Cincinnati, and Portsmouth. These are the only SBA-funded women business centers in Ohio, and they are general business incubation services for entrepreneurs of any gender, but they do have women-specific programming, so it's designed to overcome some of the unique hurdles that women face as they try to start or grow their businesses. And then it's entrepreneurial services for BIC members and for lending clients. It's kind of the wraparound one-on-one service that you can get. More information about this can be found at wbcohio.org or on the ecdi.org main page as well. As I also mentioned, we have food incubation services. So these are largely housed out of our food fort, which is a physical location located here in Columbus. Physical locations located here in Columbus. We have commercial kitchens that are available for rent to food fort members. These include incubation and acceleration services. So we have multiple facilities, be it if you're just starting out, depending on what type of business you're going to go, if you're going to go to food production that needs bottling lines or things like that. So it depends on what type of business you are. It's kind of what type of program within the food fort you'll be put into. But they do have technical assistance that is available through that one-on-one food-based business coaching. That's really important. We have a director of food safety, and he can obviously help you get your food-based business started on the right foot, built on a sound food safety foundation. But we also have things like menu development, food costing, all the things you need to be able to do to either build a successful food product to be sold at retail or to start a food-based business itself. We also have a food truck and cart commissary. So we have licensed, inspected facilities where food trucks can perform their food equipment cleaning, dry storage. We have access to freezer and refrigeration space. But like I said, in addition to production facilities for to have foods to be packaged to be consumed offsite and elsewhere. In addition to all of those food-based wraparound services, we also have the access to capital portion of it that's available through ECDI that isn't available through some of your typical kind of commissary or shared food ghost kitchens, if you will, that really sets food fort and the membership apart. Our Capital for Construction program is a program that's geared towards MBE and WBE certified contractors within the construction industry. It's designed to lower the barriers to bidding and receiving successful bids on larger dollar contracts, larger dollar, larger margin, higher profile contracts. That the typical challenge with minority and women-owned contractors, subcontractors, is that they didn't have the ability and the capabilities to fulfill those contracts, and they didn't have the capital to do it. And so this program sets up both incubation programs to assist with things like HR considerations, bidding, contracting considerations, along with a capital program that if a contractor does successfully receive a contract, they have a one-time flat fee for the labor and materials for the duration of the contract. And so it allows WBE and MBE certified contractors to be able to confidently bid and know that they have the cash flow and the capital available to successfully fulfill the contract. More information is available at ecdi.org/construction. Apologies. And then the last of our big programs is our Social Enterprise Hub. This is for nonprofit or for-profit businesses that have an ancillary community benefit that is fundamental to their business mission and on par with their profitability or sustainability. And so this could come in a number of forms. It could be an environmental benefit. It could be that they employ an underemployed demographic. It could be that they serve a target demographic that's underserved. It's really self-defined by the business itself, but these social enterprises do face some unique challenges. And so we've built up a support program around some of those unique considerations. All right, and then we do have our small business lending program. So this is one of the other big programs at ECDI that really sets our program apart from some of the other small business assistance centers throughout Ohio and our surrounding states. Some things you'll need to know. So some of the requirements that it does require a personal guarantee of anyone who is a 20% owner or more of the business. So if you have a business that's owned by 5 individuals and each individual owns 20% of the business, all 5 of them would be required to be a personal guarantor on the loan. That is indicative of SBA policies. So many of our funding programs all come with from the Small Business Administration, and so this is a standard requirement that you would experience across all commercial banking, really kind of up to some of the highest levels. Because of that personal guarantee, there is the corresponding credit reporting that goes into it, both commercial and on the personal guarantor side. And so the benefit of that is as the business continues to grow and is successful, those repayments go into both the business's credit history and the individual's credit history. There is collateral and equity injection requirements. So I have this up as one bullet point. In some ways it can be the same, and in some ways it can be entirely separate. So all of the loans that we have are collateralized. This is done primarily initially through what's called a UCC lien, a Uniform Commercial Code lien. This is a lien that's put on the business that prevents the business from being sold without paying off the underlying business debt, similar to a mortgage on a home. And anything that the business owns, it could be inventory, it could be computers, equipment, furniture, all of those things have a value, and they go and they form a business valuation. And so that becomes the primary source of collateral. There's also an equity injection requirement. So we have to demonstrate that you, as the business owners, are bringing at least 10% of the overall project cost in equity to the project itself. I like to use a food truck as a really good example of this. So let's say that you have a food truck that's going to cost $50,000 to get started. So ECDI needs to demonstrate that you have at least $5,000 of your own equity into the project. That could come in the form of a box truck that you're going to have built out into the mobile kitchen on wheels. In that instance, that box truck, which is going to be property of the business, can be counted as collateral because it's an asset of the business. It has value, and it can be a lien can be put on it. And so that has an asset of the business. You can also bring $5,000 in cash that you're going to deposit into a business checking account to serve as working capital to start the business. That counts as equity injection, but the cash can't count as collateral. And so in the two scenarios that I gave, one where the box truck counts as both the equity injection and collateral, however, a cash infusion into the business of working capital would definitely qualify as an equity injection, but can't be counted as collateral. Training may be required. As part of your application process, you'll get matched up with a relationship manager. And if we identify that there are areas in your small business journey that you need assistance with, maybe you have spent your life making pizzas, you're going to start up your own pizza shop. That's a great, excellent use of those skills and background. We want to make sure that you also understand the things that you may not have had experience in, things like HR, hiring and firing, or marketing, bookkeeping, some of the ancillary business, kind of key business functions that as a business owner, you're going to need to know about as you start your own business or grow your own business. And then we have lots of ongoing reporting and job creation activities. As I mentioned, much of our mission is based on creating employment opportunities, primarily for low to moderate income individuals. And so we want to make sure that we document the very important economic activity that you would be doing as a small business owner. ECDI cannot lend to nonprofits. It's something that we've been working on, but through our small business administration programs, we are limited to for-profit businesses. We also cannot lend to real estate buyers. So if you are a business that is in the operation of, say, flipping houses or things like that, we cannot lend to you for that. And then if you have defaulted on a federal loan or been convicted of certain financial crimes, it's very difficult to find federal funding sources, which make up a big chunk of how our loans are funded. And so it's very difficult to achieve funding through ECDI or really any of the SBA programs if you've had either one of those. The two most common defaulted on a federal loan that we see are federal student loans or federal home loans. And with both of those, the keyword is default. If you're in a deferment program or things like that, there really shouldn't be any limitation to your accessing federal programs. So our first small business lending program is our microloan program. So these are for small business loans for inventory, for equipment, working capital. It can be for business acquisition. These can go to franchises. These really are for any legitimate business purpose. Startups are capped at $75,000 with existing businesses. So businesses that have been generating revenue for 2 years or more are capped at $500,000. Our minimum credit score is 590. This is an indication that by the time that small business owners typically come to ECDI, they've extended themselves individually about as far as they can go. That isn't to say that if you have a 600 credit score, you're automatically going to qualify for a $500,000 loan. It's not really how it works, but you aren't immediately disqualified if you have a 600 credit score. The loan terms are shorter in duration. The standard typical loan term is about 78 months, so about 6.5 years. They are capped out at a maximum of 84 months, but they can go as short as 6 months. So if you have a short-term need, this can be used to fulfill that. There is no early repayment penalty on the microloans. These are designed in many ways to get businesses started or get businesses growing. And then after they get to that full revenue level, they're very easily refinanced into longer term loans, either with a traditional banking partner or with some of our other lending programs that you'll learn about here in a moment. It does have a fixed interest rate, somewhere between 6% and 12%. Though 12% is really high. I haven't seen a loan go out that high in years, to be honest. But it's a little interesting to say fixed interest rate and then give you a range. So how that works is we have 58 different funding sources that we pull loan funds from. Some of them are federal funds, so Small Business Administration, U.S. Department of Agriculture, Health and Human Services. Some of them are state level funds, some are county level funds, some are municipal level funds. Some of them are private foundation funds. And then there's lots of the traditional banks. So the largest banks that you can think of have all lent loan funds to ECDI to deploy on their behalf. Each one of those funding sources comes with a set interest rate attached to it and a set closing cost attached to it. And the way to think about it is the harder it is to qualify for a funding source, the better the rate is for that funding source. And so as part of your application, your relationship manager and our credit team will look to see what is the best possible combination of funding sources for your particular project based on the business type, the industry that it's in, the geographic location that it's in, the demographics of the business owner, all go into play into what the different funding sources are your business would be eligible for. Each one of those has a set rate attached to it, and those rates are then blended into a final interest rate. Those are set throughout the life of the loan, so it's the same each month until your loan is paid in full. The closing costs work the same way. So each of the funding sources has a closing cost somewhere between 1% and 5%, and those are blended. Something to note about the closing costs is those can be net funded from the loan. And so if you have a $100,000 loan with closing costs of 2%, that instead of you having to bring a check for $2,000 and utilizing that very precious working capital at that very precious moment in the business lifespan, that you can keep those dollars and instead the loan amount is reduced by $2,000, so you receive $98,000, and then the $2,000 in the closing costs are then not funded. So it avoids you having to bring a check to the closing table. Our next program is our Community Advantage program. So this is similar to what you would experience at some of the traditional banks. It is a SBA program, a Small Business Administration program for startup and existing businesses. That's again for inventory, for equipment, for working capital, for business acquisitions. It can be for independent businesses, LLCs, incorporated businesses. It can be for franchisees that are either being acquired or starting from scratch. The one thing to note that the loan size is capped at $250,000 with a minimum loan amount of $50,000. This does require a qualifying SBA score. So all of the Community Advantage loan applications are sent to the SBA for their approval before the loan can be dispersed. And it requires basically a credit score that is internal within the SBA. So when you put through your application, they run it through their system and they produce a score. It has to be a qualifying score. We don't really have a full understanding as to what all goes to make up that score. Some of it is industry, some of it is geography, some of it is credit of the business owner. But if you do have a qualifying score, then it opens up access to the Community Advantage program. There's also collateral and equity considerations for this program. One of the big ones being that if you own real estate and you have a certain level of equity available in that real estate, I believe it's 25%, that you are required to pledge a junior mortgage position on that real estate as part of the collateral package for the Community Advantage loan. The big advantage of this small business loan program is that it can be up to 10 years in length. So if you can imagine a loan that you have 6 years to repay versus a loan that you have 10 years to repay, that your monthly cash flow is going to be greatly benefited by having those extra 4 years as it spreads out the amount that you'll pay over each month. This has what's called an adjustable interest rate, and this is based on Wall Street Prime plus 6%. So right now, I believe it's about 3%. So the loans would come in right around, I believe the low 9% range is what our current pricing would be for the Community Advantage program. But then again, as interest rates adjust, so would your interest rate. Though quarters of a point typically don't make huge pricing differences on a month-to-month basis as compared to, say, a shorter term length. And then closing costs are maxed out at 5% of the loan amount, though again, this can be net funded from the overall loan itself. So a little bit about the process. To get started, if you go to ecdi.org/loans, you can start the process there. We'll gather some of your initial information, your business information, your contact information. We'll get you into our training programs, into our business plan programs, or get you started on loan packaging. We can match you up with a relationship manager where they will give you a full document checklist based on all of the documents that you'll need to gather. You can imagine to be either a business plan with projections, or if it's an existing business, historical financials, balance sheet, profit and loss. It'll also require 3 years of taxes for both the business and any of the guarantors. That's anybody who's a 20% owner or more. Once you have that full loan package ready, that is when you have a complete application, and that is when you are actually doing the application, making the application complete. At that point, it can go through underwriting. If you gain approval, it'll go through a compliance review where we ensure that you're eligible for all of those funding sources that we've identified, and then on to loan closing. So a little bit more detail. There is a fee for the background and credit check. We'll gather the required documentation. As I mentioned, it'll be what you can expect with really any type of loan application package. What we need to do is demonstrate that the business, either through its historical financials or through its projections, has the ability to repay the loan that it's about to take out. That is kind of the heart of our underwriting. It's still humans that we have do it. It's not an algorithm that spits it out. But after you go through underwriting, if you're approved, you'll get a letter of intent. This spells out all of the kind of final terms of your loan, all of the funding sources that are available to you, the final interest rate. That you sign this and saying that you're intending to move forward. However, if you're not approved, you get a clear understanding why. And many times we'll be able to work with you to build a plan to get to that point where you can be approved. And then if you are approved and you receive the loan, we are with you throughout the life of the loan, and many times beyond that, through our post-loan technical assistance programs and through all of the ongoing reporting and compliance requirements that we have. So when you receive a small business administration funded or guaranteed loan, there is certain requirements that you must fulfill throughout the life of that loan. And we stay really close to you to make sure that we're setting you up to achieve the highest level of business success that you can. This is Lisa Gutierrez. She started Dos Hermanos Tacos as a small food truck parked on Morse Road. She got engaged with ECDI and was very close kind of to the end of the run for her food truck as she was going into the dead period between Christmas and New Year's. She received a very small business loan on Christmas Eve that helped fund a New Year's Eve catering job that she had, that she otherwise wouldn't have been able to buy the ingredients for. And during this catering gig, about 2 weeks later, she got a call from somebody who was an attendee at the party that was catered by her that invited her to set up at the Horseshoe for Ohio State football games. She very quickly went from being a single taco truck scraping together catering jobs to being in the North Market, to being in Schottenstein Center, Crew Stadium, Ohio Stadium. She's now in the North Market in Bridge Park in Dublin, and she operates her own commissary that is part of the Food Fort network of food for it. She has 3 food trucks, 2 food carts, and employs over 50 people. And so we really think of her and Dos Hermanos as a, kind of a success story for what it means to be a small business that starts and grows. But if you ask Lisa, she still sees herself as, a struggling small business owner that is still engaged in training programs and is still trying to maximize all of her revenue sources, and is still taking classes just to try to make sure that she is doing everything she can to make her business thrive and succeed. But I see her as somebody who's providing an opportunity for up to 50 people's families, and so that's a huge deal. And we like to celebrate those successes.